Meanwhile, the U.S. Federal Reserve on Wednesday, as widely expected, raised interest rates by 75 basis points, the biggest rate hike since 1994. Chairman Powell confirmed that there'll be more hikes coming, and they could again be of this size. This could make it even more likely for the Bank of Korea to take a so-called big step when it meets next month. Yeon-seung reports.
As the U.S. faces historic inflation and record-high gas prices, the Federal Reserve has announced the largest interest rate hike since 1994, raising rates by 0.75%.
Our overarching focus is using our tools to bring inflation back down to our 2% goal.
Higher interest rates mean it will be more expensive for Americans to borrow money, affecting everything from credit cards to mortgages. But the Fed hopes the rate hike will help stabilize prices and cool an overheating economy. Fed Chair Jerome Powell even says more rate hikes are coming.
And I do not expect moves of this size to be common. From the perspective of today, either a 50 basis point or a 75 basis point increase seems most likely at our next meeting.
However, the Fed now has to walk that incredibly thin line of taming inflation without triggering a recession. If rate hikes don't bring down prices, they will end up raising unemployment while wages stay stagnant. In fact, the Fed has cut its growth projection of 2.8% made in March to 1.7%. However, with the Fed's aggressive monetary tightening, there are now growing concerns that U.S. interest rates could go higher than those in South Korea. That could lead to capital outflows from Korea, making local financial markets more volatile. In fact, during a meeting on Thursday morning, the Bank of Korea's senior deputy governor Yeon-seung said the bank will pull out all the stops to keep a lid on rising inflation. Yi said, quote, "The central bank will closely monitor the situation to prepare for when uncertainty and volatility increase and will implement measures to stabilize the local market." And Finance Minister Chu Kyung-ho plans to work with related institutions to bring down the country's rapidly rising prices. One expert says the government should keep an eye out on excessive volatility in the foreign currency market.
With the US raising rates, concerns have spread about foreign investors leaving Korea and the overall trade balance worsening. Amid these concerns, the Korean currency is falling, which may even add more inflationary pressure.
Yeon-seung, Arirang News.